Welcome everybody. This is my second live stream that I'm doing today. A few interesting things happened yesterday. Well, my first live stream yesterday was a bit long. So today I'm just gonna talk about a few things, and once I'm done, I'm gonna let it be. Then I'll continue on. But seeing as how things have been going, I feel like there's a few things that I can talk about today. Yeah. So yesterday I had a few trades open. One of them closed. One that was from here already closed. So not a big trade really, because this is a small account. There's only 1,000 rand. So I only made 60 rand. Say about, is that $5? I would like to say. Okay, just wait a second. And the reason being that the market went down because the expectations of a Fed rate hike is almost, they say, 93% for the next Fed rate hike. So that's quite interesting. And usually when a government hike rates for its own economy, it usually increases the value of its currency, because most of the time a rate hike will increase the cost of borrowing, like we spoke about yesterday. Increase the cost of borrowing, because what they usually try to achieve with these rate hikes is that they want to stop money moving around, or they want to increase the cost or slow down inflation. Basically they want to slow down inflation, because usually inflation happens when prices are too high, and or the money in circulation is too much, so they want to decrease that amount of money around. So they increase the rate in order to slow down inflation. But this also has an effect on the currency as well. It makes the currency more valuable, but doesn't mean that it's a good thing most of the time. So it just depends what the Reserve Bank or the central bank is trying to achieve. So yeah, there's a few reserve banks. Most of the rates for the big economies are very low. Look at the Bank of England. 0.5%. ECB is still a zero. Historically, it's still a zero for a really long time. It's only the Fed that started going up, as well as the Swedish National Bank, the RBNZ, RBNA. They're joining the Fed in increasing rates. BOJ just started, I think it was last year they started hiking rates. I'll just look at that quickly. ECB. Also, a high probability that they're going to increase their rates. So, yeah. So most of the time, currencies or central banks, they want to slow down inflation, and the best tool they have to do this is interest rates. So that's about the only thing they have control over.
I found something on the web about it, so most of the time
Excuse me, my iPhone.
Central banks want to go down inflation at the best. Check it out.
Forgive me about that. My iPhone overheard me speaking, and it's starting to search things that I'm talking. It's a bit funny. I don't know about investing.com's information, but it seems as if the probability of rate hikes this year are really high. So yeah, it's quite interesting. And usually, what that's gonna mean is that stock prices are gonna go down. Currently, the stock prices are really high. Let's look at the South African one. South African stock prices or stocks in South Africa are considered as emerging market stocks, so they're a bit riskier than most other stocks. And most of the stocks last year were in the bullish trend. So if you look on the weekly chart over here, we've got this run over here. You can look at it. If you want to use candlesticks, you can see how we're at the top of this trend really. And hiking rates will actually go against this trend, because now people don't have enough money to invest. The prices are going to go down. Some people are going to take out their money from the market, and this doesn't only have an effect on the stock prices, it has an effect on the bond prices as well. So yeah, people wouldn't want to buy bonds that are at a high interest rate, or is it? I still need to verify my information. But usually, if you bought a bond, and usually bonds they have a fixed rate. Usually bonds have a fixed rate. So once you buy a bond and it's at 5% interest rate, it's gonna stay like that until you sell it. So you usually want to have a bond with a high interest rate. So people are actually gonna go into bonds when the interest rate goes up, but they don't want to buy lower yielding bonds. Yeah. So basically the bonds that are comprised of lower interest rates are not going to be bought anymore. So they wouldn't want to buy those. So people are going to sell those, and then they buy higher yielding bonds, the ones that are going to be issued later when the interest rates go up. So yeah, so anyone holding a bond that is at 1% right now is at a disadvantage to those people that are going to have bonds later on when the interest rate is at 2% to 3% later. And I'm talking really long term right now, because look at these. The rates is still so low, just for the Bank of England, the Bank of Japan, ECB still at the same price. Is this even right? That's not. Current rate is over here, 0%. You can look at the website itself and see what they say. This is the president, or yeah, the president, Mario Draghi of the ECB. Inflation rate. So talk about it, things being very low right now at interest rates. So, and inflation is starting to pick up because the market has started to grow a little bit and started to expand. So inflation is picking up, and then, but you don't want too much inflation. You don't want inflation to go too high, otherwise your country is unable to purchase. That has a lower purchasing power than the other country. So yeah, you don't want a high interest rate. I mean, a high inflation rate. So usually governments will try, or central banks will try to hike rates in order to slow down the market. Let's look at another S&P 500. It's a favorite. Now, give it some time to load. S&P 500, really high. Really high. So about that. A friend of mine wants to join in. Forgive me about that. Yeah, S&P 500 as well. Look at this. Look at this trend. Look at this beautiful bull trend. Yeah. So today basically what I want to talk about is how markets move and why they move. So yesterday the reason the market moved specifically because, and I'm talking specifically on the dollar side, because it wasn't only that the dollar was the one that was moving yesterday, because the same thing happened with the rand. Same thing happened if I'm on the 4-hour chart. I'm just putting it on the 4-hour chart because it's easier to see the movements than on the daily chart. On the daily chart, it won't look like much. It won't look that much. But on the 4-hour, you can at least see, okay, yeah, we had a movement over here. But they haven't done anything yet. They're still yet to meet at the end of the month. So yeah. Yesterday we broke this trend line resistance over here. I drew a better one last night, so this is a better one because we have an additional one over here. So there's a descending channel over here and then a descending wedge, and it looks as if there's an interesting resistance zone over here. So prior support could turn resistance. So this is an interesting point to keep out on. Same thing on the dollar. Let's see. Yeah, same thing. So the market found support yesterday. After hitting resistance, it came down, and we found support. So we're continuing on. We could get out of this now. This wedge. Let's just go on the 4-hour chart. We look at it this way. Today we might just continue on with, we might just drop in try. I hopefully wanted to come down there. I'm on a demo account, but I know I would like my analysis to be correct. But the thing is, when I made this, I jumped the market. I made this trade around here. I'll show you here. It's actually better visualized if I do it here. When I made the trade, I made a trade here using my moving averages, because I usually trade with moving averages. I made my trade here, but I jumped the market, and then this happened. I didn't come in. I came in the previous day. Well, the same day, but with a different trade that was higher than this one, and that one just closed around about here. So that was about 60 rand. This one is about 100 rand. Don't worry about the pricing. It's about how much leverage you use. I like to use small leverage. I go to the lowest lot possible. That's because I normally hold long-term trades. I hold buy trades really long, sometimes a week. And I let them close down. And yeah, that's why I usually just put it at the lowest and let it hit my take profit. And it's not a good thing to not have a stop loss, because I would have been stopped out. But you should have a stop loss to protect you. If you have a strategy, you should have a stop loss. But I normally use I normally place a trade when I know it's gonna go with me. So I wouldn't put something here and say, okay, no, this thing is gonna go down here. No, I would put it where I know it's gonna. Yes, the probability of it coming to my side where I believe it's gonna come is quite high. So this one, the probability was okay, say about 60%, but yeah, it still went against me. If I had put a stop loss here, I would have been stopped out, and I would have lost 100%. Well, 100 rand, because it's about 1-to-1. This is 1-to-1. Yeah. So using such amounts of money is very risky, and you usually want a ratio that is 1-to-2. You don't want to put your money in something small. Okay. Let me try again. Oh man. Okay, guys, I do have a live stream chat group for Skype. So basically, anyone can join. And yeah, so basically, in the morning, I have a group, and then you can join in, and then I'll like conference call, and then we can all like discuss about what we're talking about today, because it helps us better if. Oh man. Let me just call him. So we can all like share information and learn. Oh my gosh. I added him yesterday. Yeah. This is embarrassing, right? Yeah. Okay. So anyone who wants the link, you should find me. If you have my number, you can contact me, and then I'll give you the link to the Skype group, and then we can discuss in the morning. Okay. He's here now. Okay. Oh. How's it going? Okay. How are you doing? How are you doing, man? Okay. Yeah, yesterday, yeah? Okay, yeah, I heard you. You wanna put on earphones? Because I can hear you. I mean, I can hear myself. I don't want to be able to hear myself. No, put on earphones so that I don't hear myself. Yeah, then I don't want to hear myself. Okay, but it's not that bad, so it's fine. Yesterday, guys, Level had a question about wasn't the market supposed to go up? And in our WhatsApp group, we kind of like went through it. I can actually hear myself, Level. So yeah, wasn't it supposed to break up though? That was not a definite level that the market was gonna break up, because the market still had to find support. And I have a picture analysis that I did on my phone over here. We still had to find support here in this zone over here, and I believe we did. If we go look at it now, we can see that we actually did hit that support. Let's go much lower, and let me do this. Here it is. The market needed to find support in order to go up, but that doesn't mean that now this support is the support that's going to push us all the way up. No. And then another thing is, because everyone expects the Fed to hike rates, the chances, look, we have 1 day until they hike rates, and the probability is really high for them to hike rates. And because of that, if they hike rates, the value of the dollar should go up, because now there's gonna be less dollar in demand, and when something is scarce, it usually there's the value of it goes up. Lebu. Lower the volume because I can hear myself. It's not easy for me to speak when I can hear myself. Of the video. YouTube. Oh man. Okay. On YouTube, you've got your volume bar. Actually, you should mute it. Just mute it. Are you using a phone? Then I don't know. If you're on YouTube, go there and disable the volume. It's on the phone. You should see it on the right. I mean on the left, sorry. No, you don't have to hang up on Skype. It's multifunctional. It's gotta be still open. Okay, never mind that. Okay, yeah, as you can see, there's the trade that I made up here, and it closed. So the market still had to find support in order to go up, but the chances are it might go in deeper and continue on, or it depends. It depends on how it's going to all work. But if the Fed actually hike rates, we should see a deeper retracement of the dollar, because the value of the dollar is supposed to go up. So that's what to be expected. And we had a discussion over here. One of our friends posted why, the reason why it wasn't supposed to go up, and it's over here. And yeah, as you can see. Okay. With that, let's see now. Yeah, there's already things going on in the news that yeah, this is how it's gonna happen. So yeah, Lebu, do you have any more questions that you want to ask? Lebu. Okay, it seems like you can't hear me. Anyway, yeah, I was talking about, and if the Fed was to hike rates, it should devalue. It should make the. It should be, yeah. You don't have to hang up to lower the volume. It's in the app, the YouTube app. If you're using your phone, it should be in the app. You can mute the video, because obviously it's my voice you need to hear. Well, I don't know what phone you're using, but usually it is there. Anyway, do what you must. Do what you must. It's no problem. Look, the market already moved in this. There was a large sell-off on the S&P 500. So You can see people are already moving their money out. People usually want to go and use a currency that they have more higher purchasing power, I would say. So yeah, like if you wanna borrow, it's not good to borrow with a currency that has a high interest rate, because now it's more expensive to borrow, and yeah, and that borrowing money you could be using it for investment and stuff like that. So people are taking their money out already out of this. Look how low look how low it went actually. It's dropping really hard. Just this morning alone, 1 hour ago. So yeah, the market is really moving on this. So yeah, but we are at a really a big extension of this trend. This is the first time we see red in how many weeks? Let me try and make this bigger. Later on I'll do stocks as well, not only forex. And just before I close here, I'll just do a quick analysis of other currencies as well that I look at. Right now I'm just focused on the South African rand and the dollar. So yeah, this is actually my view. Same thing can be said for the Euro USD crossbear, that it's overextended itself. It's at the top of this channel that we're supposed to continue on. So if you look at that, let's go back. Okay, news came in. Apple. Okay, it's too low of a time frame. Around about 1 o'clock yesterday. Is that midnight? Huh. Okay. There was this bid up. Now we go down again. I would not say that it was the news of the Fed possibly hiking, and they haven't hiked yet, so we don't know what's going to happen. You see, the thing is with the markets, you can never know what's going to happen. So it's not a definite, but the chances are, the probability of them hiking is really high, as the market puts it. So if that's so, you might as well start jumping the gun. The thing is with the market, it's full of self-fulfilling prophecies. People start talking about something, it eventually going to happen because everyone's talking about it. So that's something to keep out, to keep in mind. You know, the thing is, things don't just happen randomly in the market. Sometimes it's because of certain events and certain things. Obviously something like a catastrophe or something like that is random, of course, but you didn't expect it. Well, that's your risk in the market. But most of the time you know what to expect because of past events, but you can't make assumptions based off past events, because usually the markets are going to react the same way, and different people use different strategies to trade, so you never know what they're going to do. You know, they might have different reasons or different fundamental aspects to look at that might move them up or down. You know, you never really know what's going to happen. Yeah, let's look at this one quickly. Look at this extension. And this is on the 1 hour chart. This is just way too low. Yeah, this is much better. S&P 500, very extended. And actually, when I draw charts, sometimes I like to use the line chart so that I can see the closing price better. That way, I get the trend better. I can see it. And then I go back to the candles because I prefer candles. Candles tell me more than the line chart, you know, because candles, I mean, the line chart only tells you where the price opened and closed, whereas the candlestick will also have a high price and a low price. So yeah, it's more information for you, and it's usually helpful because it can give you more information for later reference when you wanna trade. So, but I usually use the closing price for my trend lines. So let me put so we have something like that. Okay, let's go back. Same thing, and same thing can be said. Let's see what's going on here. Yeah, what's up? Okay. Okay, it's fine, it's fine. Don't worry about it. Did you still have any more questions that you wanted to ask me? What am I exactly explaining? Good question. Well, I went over. Yeah. Yeah, I'll do that definitely. Oh wait. Okay. Yesterday, what was your question? You asked it. Yeah. Yeah, but what reason did you think it was gonna break up? Look, this is my analysis beforehand. So if you look at it like this, you can like go like this. Ah, forget about this. Okay, so this was yesterday. So if I close yesterday, this is how it should have looked like for you. Can you see this now? Okay, so what was your like? What made you think that it was gonna go up? Did you make the assumption based off some analysis, or just say, oh, suppose by looking at it? Yeah, but what did you see specifically that made you think that it was gonna go up? Yeah, yeah. No, okay, we are in the uptrend, you know, the long-term uptrend. We are in the uptrend, but it's not a given that the market is gonna go up immediately. And if you look at this, let me actually go on a cleaner chart. Let me go on a cleaner chart. If you look at this, we are at the top of this trend really right now, but look at every candle. Every daily candle is a bit lower than the other one, a bit lower than the other one, meaning that this is what you call like a kind of a correction or a slowdown. It slows down, then once it hits support, it's just going to continue on. So today we don't know how the candle is going to turn out, so don't make assumptions based off your current candle. Make your assumptions based off your previous candle, because it's telling you the probability of things that are going to happen. You see, usually most of the time the next candle is going to be within the previous candle, depending, but chances are something like this is going to happen where we just continue on, because There was stimulus down here. Look, fresh supply. We just continued. You know, we just went on. But after doing this, after coming from this over here, you know, we had just reset and then we just continued on. The trend continued on. There was no need for the market to now play around this area because it's already did. Look, it just went straight up, went straight up again. It didn't need to play around this area because we already did play around this area, and we're like, okay, we know this area. We're just gonna break it. We're gonna break it through. And usually, and you can see here, it's actually resistance. You can draw it in. Resistance and support are usually broken by huge candles. So you can see this. Okay, and then here's support, but look at the support where it's coming in. It's coming in at prior resistance, you know. So look at this, prior resistance. Now it's become support. So I'm looking for this one to become the same thing as these ones over here. I'm looking now that's why I made this trade over here. I was like, okay, this looks interesting. Looks as if we might come back to this because we've overextended. But that's not a definite, because look at this one. It did find support over here and it continued. You know? So market going up because of a wedge doesn't entirely mean that it's gonna go up. It's not a definite and it's not a given. We could actually continue on this one. But now that yesterday my friend explained to you, Kumbo explained to you that the Fed is about to hike rates, and hiking rates usually means that the currency which the domestic currency which the bank is going to hike rates in, it's going to increase in value because now the cost of it is going to go up, and because of the cost of the borrowing with that currency is going to go up. There's gonna be less demand for it, and then that's gonna increase the value of it. So when something is scarce, it usually increases in value. You get it? Lebu. So when something is, yeah? Why not? Yeah, that's why I told you to mute YouTube. Mute YouTube. You can't. No, there is a mute button. There is a mute button. You should look for it. It's better if you use a laptop next time, so that so yeah, just lower your voice or on Skype or something. You can lower the voice of the call. But anyway, I'll continue on what I was saying. This is long term. What you're looking at here. This is short term over here. This little green one is short term, and I tend to look at the longer term view. Look, depending on how much leverage you're using, you can really get out a lot of money out of this. This is 100 pips over here. So if you're a day trader, 100 pips is not something. It's not that bad. It's something. Yesterday I only got 50 pips. So I took out 50 pips from the market yesterday, from this top, and then I could have taken out more. Let's just have a look. From here to here, to 75 pips. I could have taken out about 75 pips, but I got out at 50 pips, exactly at 50 pips here. So yeah, but my current trade that I have open, I'm looking to make 100 pips over here, because it looks as if the market could come and try find support here and then continue. That's And that's the wedge. That's the wedge complete. You see, if I draw it out, I can draw it out quickly. Let me actually. Yep, that's it. It's not complete yet, you see. We still need to complete the wedge. Then maybe we might continue. Oh, we might just... Yeah, okay. So yeah, from there, we can make assumptions, but seeing as the Fed is hiking rates, we need to look for a stronger dollar, and that could be taking us down. And this is just indication that we might go down, but chances are this trend could continue on. Because what happened last year, that the market reacted very differently last year, because this events where I was completely confused, because I'm still an amateur and I don't know that much about the financial markets, but I was confused to know that a certain fundamental and technical, only made sense for one direction to be favored than the other, but the market chose something different, and that was the Euro USD. And it happened a lot last year. It was quite confusing. So, and you want to be careful about what you hear and what you see on the markets, because you can get confused quite easily if you're quite new to this. And that's something I've experienced myself, getting confused by the market. It's not an easy thing to play around with. You need to take time to focus and really understand what's going on. So yeah. But I believe, oh. Focus on participants. Okay. I think I'm gonna end it soon because Level, did you sort out your issues? Okay, but tomorrow try to use a computer. Yeah, just try to use a computer tomorrow. Why does it do? Okay, don't worry about it. I don't know why MT5 does this, but yeah. Yeah. Like you said, you must post questions when you have them, then we can answer them here. Why does MT5? Anyway, if you have a question, just ask it, and then tomorrow we can talk again, and then you can ask questions. But yeah, is there anything you want to know? Anything you would like to know? Okay, start with the simplest if you want to. Understanding trend lines. Okay. Okay, what specifically do you want to understand? How do you plot them? Okay. Okay, let's go here. Let me just remove these. Okay, yeah, so we're just gonna do that for the last few minutes of this talk. So, trend lines. Trend lines usually have to touch different points in order for them to be valid. You see? You can, as long as they touch, as long as it touches, then you got a valid trend line. As long as it touches, you know, you can, as long as it touches, as you can see here, there is a point touching it. But seeing as this is a current candle, I wouldn't plot it there because it's a current candle. You never know, this candle could just burst up and then make this trend line invalid. So I prefer to always put it at a previous candle high. That's what I'm saying. You just asked me whether you can put it on the highest point, and the highest point can be at the whiskers over here, or the tails. Look, they are the highest point. This is the high and this is the low. Remember, if you remember what we did last time with the candlesticks, yeah. So you've got your, okay, if this was a bullish candle, you've got your body, your candle body is the red bar, and then this whisker, this wouldn't be there, but you've got your high point and you got your low point, and then you got your opening price depending on which candle it is. If this is a bearish candle, a bearish candle means it opened higher than it closed lower. So you got your opening price, closing price, low price, high price. And it can go either way. It can open here and go up and then continue down, which usually does happen. Or it can open here, go down, make a low, go up and come back down. But that's funny because it's basically like this. Because if say the weekend, if the week opened here, this is the opening price, it went up, it made a high, it came all the way down and it made a low. So it can happen like that, like it opens here, oh, but this would be, okay, let's just go on the daily chart quickly. There is it. Yeah, so basically this is it. It opened here, went up, went down. Okay, you got that. So, okay, let's get back to trend lines. So your trend lines, you want to plot them at points where the market stops. And it must touch. And the candle mustn't have been broken. I mean, the trend line mustn't have been broken. So we touch there. There, it's valid. And then we can continue on. Here we go, another one. It's valid. So the market is trending. This is obviously a trend because we found resistance, and this is a resistance line. Resistance is always on top. Remember that. Yeah. Okay. So let's find another one. There's another one. We found resistance again, and then we can say that currently we are at resistance, but it's not a definite. The moment the price, let me just show you quickly. The moment the price does this swoop and leaves this thing, if it bursts up like this and it closes, if the market closes above this resistance line, this resistance line now is broken. It's dead now. It's no longer valid. You get it? Yeah. It's no longer valid. You don't get it because now it's no longer resistance. Remember? No. I'm giving you an example. This line over here symbolizes a candle that has broken up. It went above this resistance. In order for it to be a valid resistance line, the market has to keep being pushed down underneath this trend line. So the moment the market goes up like this, this trend line is invalid. It's broken. Yes. So then what happens next is, if the market comes like this, the market comes like that and does this, this trend line has now become support. You get that? Because now it's pushing the market up now. It's no longer pushing the market down, because the market broke through it, and then now this trend line has become support. And yeah, no, there must be a closing price. It must close above. Tails, no, the tail can be a candle as well, but it's part of the candle. But the closing price, if it's above the trend line, the price, the market closed above the trend line, that it makes it invalid. Yeah, if it closes above. Here, this is why I like to use line charts to plot by trend lines, because then I can just do this. I just put it on top of the closing prices. The market is still trending downwards. You see? Can you see that the whiskers are non-existent if you had a line? You know? So, and this is how it should be actually, because the market, these new candlesticks is just a new way to visualize the market. But this is how actually the prices are. But the candlesticks just give you more information. You get it? If you were in this mode, the market could have, yeah. Yeah, that exactly. I normally use the line graph to give me the closing price. Okay, you see, this is the closing price. So if the market was to do this right now, it broke up and came down like this, the closing price is higher now. Can you see that? And I'll even show you that if it does this now, we now have resistance up here. This is support. You get it? Can you see that? We just draw that like this now. You see? Yeah? Support can also become resistance. Support can also become resistance. So if the market breaks down, let me give you an example. Okay, let me just delete these. Okay. Now let me give you a quick example now. So right here looks like we have support. Short-term support. Yeah, can you see that? Yeah? Can you see this new line that I plotted? I'm gonna make it green. Show you that it's support. Okay. So here's usually what happens. The market will break down. Whoa. This support line is now invalid. You get it? Because the market closed below it. The market closed below it. And then the moment the market does this. The moment the market does this. Yeah? They should really make this easier. Okay. The moment the market does that, now we have resistance. Can you see that? Yeah? Because basically it's doing this over here. So that's easy. That's basically your trend lines. You get it? So yeah. Got Okay, we coming close to close the tab. Maybe I'll continue on tomorrow. But look, support is always at the bottom, below. Yes? You get that? And resistance is always at the top. Yeah? A down-going graph. A downtrend. Look, we are in a downtrend right now. Short-term downtrend. Really short-term. I'm gonna say, anyone who says 1 hour is short-term, that they're talking really short-term. Even daily short-term. But in the short term, we are in the downtrend. Look at this. We're trending lower. Can you see that? Can do this. We are trending lower on this market right now. So all you have to understand take away from trend lines is that it must be pushing the price in a certain direction. Now, if it's a resistance line, it must be pushing the price down. You get it? Yes? And then if it's a supportive trend line, support line, it must be pushing the price up. Look, here we got pushed up, right here. The market came down from resistance, support. It came down, support. Came down, support. So this is a support line. Yeah. So the support line always goes at the lowest closing price. Lowest closing price. You see? So, and then as well as let me see now. Yeah. It's always the lowest point. The lowest point. This is actually, this is basically a better one actually, like this. Yeah, because, yeah, look, we tried breakdown, but then we actually found support. Okay, there. And if you put the candles, if you put the candles, look what happens, because you can see the whiskers. You see? Look at that. This support is still valid because we didn't find resistance on this support. We didn't find resistance because if we found resistance, we're supposed to go lower, hit it, and find resistance and continue on. So this line is still support, and this line as well is still support over here, as well as these two resistance lines. They're still resistance lines. You can even call this a zone because whenever the market enters this zone, it finds resistance. Look, because we entered it and it's becoming smaller. Ah, there we go. So actually now the market just closed. Okay, I have to end the stream now. So we'll continue tomorrow, yeah? Okay.